Welcome, welcome. Happy Friday. We are back for another exciting episode of the Tech Behind FinTech. My name is Nnamdi Osuagwu. I'm the host of the Tech Behind FinTech, where we talk about the technology that powers the money. Today's guest, I'm very excited to have him, is Jamiel Sheikh. Welcome to the show, Jamiel.
I'm glad to be here. Thank you for having me, Nnamdi. Appreciate it.
Look, audience, today's episode is Do You Understand Decentralized Finance, DeFi? Think about it. Do you? We're going to have a Jamil's take is very interesting. He spent expert in the game, years studying it, multiple projects. So, really great to have him. And we're going to really dive into this topic. Before I do that, as always, let me read Jamil's impressive bio, and then we will talk about a news article and jump right into it. Jamiel is the founder and CEO of Chainhaus, a digital assets advisory and education company focused on decentralized finance and artificial intelligence. He has over 20 years of experience in technology, capital markets, real estate, and management. Prior to Chainhouse, Jamiel worked for organizations like Lehman Brothers, JP Morgan, Bank of America, Sun Microsystems, Sony, and Citigroup. Jamil is an adjunct professor at Columbia Business School, NYU, and CUNY, teaching graduate level blockchain, AI, and data science subjects. Jamil is currently authoring the Decentralized Finance Phenomenon for Columbia Press and is the author of Amazon 100 best-selling Mastering Quarter. He runs the Central Bank Digital Currency Think Tank, which consists of central bank academics and IEIs and Blockchain NYC, the largest blockchain and digital assets meetups in NYC, consisting of over 10,000 local members, and holds a marquee conferences like DeviCon, um, DeFiCon, NFT World, CBDC Summit, and DLT Summit. Jamil enjoys cooking, coding, reading dry and boring white papers, dastardly excessive travel, the elegant nuances of MMA, and is an active contributor in several Java, Kotlin, Python, and Rust open source projects. Very impressive. Very, very exciting to have you today. How's your day going? Or morning, really?
It's going really well. So, I'm doing a little preparation for, I'm building an NFT product. So my morning starts off with meeting with my development team. We're building a product that lets you mint Instagram photos called InstaMint. And so, we bought that domain name a couple of weeks ago, and we're pulling all the pieces together and getting ready for the NFT conference that's coming in a few weeks here in New York. And then we've got, tomorrow a full day of Blockchain 101, DeFi 101, and NFT 101 set of master classes virtual. So I'll be teaching that. And so I'm, tweaking my curriculum on that with the latest updates. So that's been my morning.
Oh, sounds like a very, very productive morning to say the least.
Yeah.
I know in the latter part of your bio, you talk about MMA. I know we have that in common. I'm a
Yeah.
huge fan of the sport, and also practice a little ground stuff. So yeah, it's
Yeah.
always good to meet someone who shares that interest. Um, yeah. So look, audience, we're gonna talk about the conference tomorrow that Jamil is hosting. Very informative and free. So we'll get into that for sure later on in the show. Let's just make sure the comments, we can see each other's comments. So as always, let's jump into a quick news article, and then we're gonna really jump into the DeFi conversation. So let me add that into our stream right now. So this is an article that I found really interesting, kind of in line with our conversation since we're talking about crypto. So there's a company called Mint Green in Canada, and what they're doing is they're going to recover energy used, and they're going to recover energy from Bitcoin mining activities. They're saying they're going to be able to heat 100 residential and commercial buildings in North Vancouver with a population roughly of 155,000. They're partnering with Lonsdale Energy Corporation to supply the heat to the residents. It's going to be kicking off in 2022. Just found it fascinating actually, because we talk about a lot of the energy consumption with Bitcoin mining and so forth, to see what they're doing. So what there's another part of the article. It will prevent 20,000 metric tons of greenhouse gases per megawatt from entering the atmosphere during its arrangement with North Vancouver. The recovered energy will be used to heat the 100 residential and commercial buildings. Just want to get your thoughts on that, Jamiel, and where do you, if you see that to be a trend moving forward, and so forth.
Yeah, I mean, so actually, I have a friend named Omid who wrote a piece for Financial Times. I think this was early August. Omid Malakan, and who's known as the blockchain explainer, or explainer, chief explainer. And he argued in favor of Bitcoin's consumption of energy. So I kind of agree with that position. It's a position I've stated publicly before. But obviously, as much of this energy consumption that is going on, it can be reduced, is great. But the way that I look at it is, it's whenever you look at anything, you look at what's the cost and what's the benefit, right? It's always a cost benefit ratio. So we burn energy to heat our homes during the winter, and we say, well, we don't say, well, that is hurting the environment, right? It may be depending on the source, but it's not an argument against heating homes, right? You don't say, well, we have a problem with heating homes. So you say, well, we need to heat homes in order to protect life, and therefore there is a certain expense that we must incur, whether that's through certain fossil fuels, or there's renewable energies, or sustainable, whatever means there are out there. And so then there is in this debate around Bitcoin whether or not, I think, and that debate hasn't occurred, whether this expenditure that is occurring, which is exorbitant and does have impact on the environment, justified. And I think that is a better question that needs to be asked. But solutions like this that we see with Mint Green, I think, is a way to go about it. I don't know how prevalent this would be. I don't know really what the downsides or the upsides of this will be. But a lot of the people that are doing mining Bitcoins, they want to run their infrastructure, but not be on the radar for regulators or for tax purposes. They're generating Bitcoins, and they may not necessarily be reporting that. So there is this kind of, I think there's going to be this challenge where a lot of miners, the ones that are especially outside the U.S., and even though the U.S. now is leading in terms of mining capacity, is maybe a reluctance to kind of come up above the surface and poke their heads out and say, yeah, I don't mind integrating with this and that and that and that, and being tracked, and my consumption being used for something else, like heating, or in this case, how they're using it, right? So I think it's a very interesting question. I think, though, obviously, 5 years from now, I think Bitcoin has to really be in a position to justify its energy consumption based on just popular opinion, right? Just popular opinion coming back and say, hey, this is maybe excessive, because the underlying opinion is people don't understand what Bitcoin is. If Bitcoin has zero value in your mind, then its energy consumption is exorbitant, right? It's maybe
True.
not justified. But if you think Bitcoin is the next global currency, then this energy consumption is justified, because it's resetting the world order. Anytime you have a war, World War I, World War II, and Vietnam War, there's an exorbitant amount of cost in the interest of the proclaimed interest of changing things, or justice, or whatever it may be that either side is arguing, and they justify, the exorbitant cost of lives that occur. So, and whenever a city is bombed by any nation, whatever nation, there's tons of collateral damage, and nobody really says, hey, that's a cost that can't occur anymore. We do say that, but it still continues, right? That kind of problem continues. So in some ways, if there are people that believe Bitcoin is going to reset the world order and establish a new way of doing currency in a way where we are individually liberated and we have sovereignty over our own money, then the cost of that's occurring right now in terms of the environmental impact may be justified. And say, okay, well, yeah, so what if I'm consuming the energy of a small country? That's what energy is for, to be consumed. But I think we can all agree if we can reduce that the impact of that, that energy is going to get consumed regardless. So if we can channel that energy and be like, in this case of mint green, I think that's going to be hugely advantageous. And I think from a PR point of view, the Bitcoin community is going to move more and more towards this. And I think this is a huge opportunity for businesses to come and say, well, we can provide these kinds of capabilities where the mining is occurring, and then we may be able to provide the heat that's generated as a service, and that improves profitability and hedges some of the mining risks that will occur here. So I think it's good for business. It's good for Bitcoin. But I don't think it, in my personal opinion, it shouldn't address, well, is Bitcoin too costly in terms of environmental impact? Because that's a different question. My point is that's just a different question.
No, I mean, I totally understand. I mean, when we look at motor vehicles, right, and the carbon impact, right, but you see innovation happening around electric cars. You see hybrid vehicles. So in looking at Bitcoin, as you mentioned, right, if it is the next global currency, if it does reset certain financial paradigms, right, the question is, how do we make it more efficient, right? So whether that includes, from the consensus model of proof of work versus proof of stake versus things like that, but along that same line of these types of inventions. But I like one of the really want to tune into one of the points that you made, in which the mining activities right now, the regulatory aspect of it, right? If you're doing it under the radar, these types of activities with mint green, now it's more visible. So that's an interesting perspective that you put forth. I feel in looking at, would this be a trend? But like I said, it's different ways to make things more efficient, and hopefully we'll see some of that. But yeah, no, all great points as usual.
Yeah. Yeah.
So with that, really, this is going to be a short. I know Jamiel has other appointments to get to, so from that, those are the articles that I want to cover, and I want to really just jump into it, right? What the today's topic of, do you understand DeFi, and then think about it, do you, is because Jamiel's perspective is just different. And I want to really just dive into it. And please, folks, as we're talking, going through this, if you have any questions whatsoever, please just feel free to chat it. We're right now streaming on Facebook, LinkedIn, YouTube, and Twitch. So definitely feel free to chat your questions. We will post them, and Jamiel will answer them. All right, let's talk about DeFi. Please, let's get into it. What is DeFi, for those that don't know?
So the way that I'm defining DeFi in my book is a little bit different than the market is defining it. So generally, the market, most of the literature on it says it's taking traditional finance and making it decentralized, or something like that. Something along those lines. And then they talk about some of the attributes about DeFi, that it's composable, it's decentralized, blah blah blah. But I think that's not the story. I think the real story is that it's really the people and the vision behind it, right? And what it's become today, what DeFi is today. So, I define DeFi as the Darwinian gamified crowdsourcing of financial engineering, right? And the fact that it's decentralized is a component to that. But it's Darwinian in the sense that I can produce a protocol that does that replaces a financial service or creates a brand new financial service that probably didn't exist before. And if I don't do it well, somebody else is going to come along and do it better, right? It's kind of that rat race, right? It's not rat race, it's competition, right? It's fierce competition. And this is, because it's open source. If it's closed source, people don't look at it as much, and it shouldn't really. The fact that it's open source is really, really important. And that has allowed people to look at the code and say, well, I'm just going to fork this code and improve it, and boom, I've got this whatever market lead that you thought you would have in generating a product. In the traditional world, you generate a product for 6 months and you stay quiet, and then you announce it, and then you have 6 months of product lead on the market. It doesn't exist in this space. So it's Darwinian, meaning that the best will bubble up, which is good for the market. It's bad for the losers. It's maybe bad for the investors in the losers, but that's what we claim capitalism is, right? So, and that's how basically the VC model. So, and it's crowdsourced financial engineering, meaning you and I, who may not be PhD quants in financial engineering, can say, hey, I can put together a couple of different formulas that I understand really well. I've spent 2 months studying it maybe, and I'm going to put it into code, or I'll hire a developer to do it for me for, not a lot of money. And I'll put it out there in the market. And if it does well, then I've created an entire new market, a financial market that may not have existed before. So this is an ongoing process, this crowdsourced financial engineering, where we are thinking and envisioning new ways of doing finance and prediction markets and lending and all that, right? We're not borrowing necessarily from the traditional market. We may be taking pieces of it, but that's just one ingredient. We're baking a cake, and maybe the traditional market is some of the sugar. It's not the flour, right? It's maybe it's the water, but it's not these other things, right? So it's going to scare a lot of people, and it's going to entice a lot of people. And I think we're in that phase where there's a lot of that occurring. People like, I don't understand what this is, stable coins and all that. And if you take the example of Uniswap, you had the person that created Uniswap, Hayden Adams, used to work for a company called Siemens. It's German mechanical engineering type of a company. He was a mechanical engineer, had no idea of coding, studied a little bit of finance and some of Vitalik's writings around automated market making, went off and implemented it, got fired, as I know it, and then spawned this company called Uniswap and started doing creating liquidity in ways that no other financial institution before ever thought of. Goldman didn't think of it. JP didn't think of this. Nobody else thought of this. And it's guys that are not economists, guys that are not financial engineers, the guys that are not, having these massive budgets and capital allocations to innovate, doing it basically literally in their bedrooms, in their home offices, coding all this stuff, putting out there in the market. The market says, oh, this is going to work, and then a flood of money going into it. So I think that's what DeFi is. It's not any specific protocol. It's more power to the people in order to innovate in finance. And then I think the term finance is getting more and more broad, right? So like NFTs, I would consider all of NFTs as a form of DeFi. It's not separate. It's the same. DeFi is an umbrella. NFT is a branch of that kind of DeFi. Well, DeFi is a tree, and the NFT is a branch. So I think because we're dealing with decentralization, ownership of digital assets, and they have market value, and so automatically we are in the world of finance, and we are obviously in the world of art as well. So when you study real estate finance, you're dealing with property, right? But then the number side of it is still called finance. The same thing with NFTs. You may be dealing with art and other things, but then the number side of it is still finance. And I think you mix in this whole a governance piece, the DAOs and all that, and the ability to anybody to submit proposals, and the community to vote on those proposals, uh, I think is very, very powerful. And it's not that it's decentralized, that where its power is. It's the fact that now the community can get involved and create change and impact. So I think that's very powerful, and that's a big part of DeFi. If you look at these protocols like Aave, and they have very strong governance communities that are coming together, and people are voting in things and changes and things like that. I think that's more powerful than the idea of a digital currency. I think the digital currency is just a sideshow. The power of, I think, the future of DeFi and blockchain is really this whole idea of governance, community-based governance, which will impact DeFi, which will impact NFTs and things like that. I think that the idea of like, oh my God, it's a blockchain equals digital currency is incidental and maybe not that important. This other ability to govern and DeFi are going to be, I think, the most important impact points.
Let's take a step back, because you covered a lot of things, and for our audience members that may not be up on some of those topics, I think we have to like really break it down, because it's a lot of good information. So one of the things that Jamiel just mentioned in Uniswap, that's a digital exchange. It's a decentralized exchange. Like, people are familiar with Coinbase and so forth. It's number 2 in terms of the top decentralized exchanges. So it's different, and it's based on the model that Jamiel just mentioned, in terms of a community-driven model. And he mentioned terms like governance and voting, unlike a central Coinbase that you may know, like Kraken or Coinbase or Bittrex and so forth. So that's a list of the different top ones. Uniswap is 2, and very important point. It was started by someone who was working, who was a mechanical engineer, and he developed this as a side project, and now it's number 2 with a volume of close to 1.3 billion. So that's one to kind of bring that up. You touched base on, so for people who don't know now, can you dive into that community model? So, it's decentralized. Maybe this is started by an organization, by a group of people. You get developers or one person, but then it grows more into a community aspect, the voting, the governance, where those original members maybe take a back seat in terms of the management and because it's automated now. We're gonna get into, I guess, smart contracts. Can you just explain that for the audience?
Yeah. So that has accelerated over the past year. If you look at a stable coin called MakerDAO, they had a foundation. It was basically a nonprofit that managed their DeFi protocol, which the MakerDAO protocol, and they dissolved that foundation, right? And so they're removing themselves out of the picture. And then where the governance works is you basically have software sitting on the blockchain called smart contracts, and the smart contracts, the ecosystem involves tokens, right? And so the smart contracts know the total pool of tokens and who has what number of tokens, and that tokens represents votes, right? And so there will be a system where a proposal comes along and says, hey, I propose that, and anybody can propose, I propose that we take this software and we do XYZ with it. We add XYZ features to it. And then the community votes on that. And the way they vote is through their tokens, right? The tokens represents their votes. And the smart contract is aware. So let's say I have 10 tokens. The smart contract knows that I can put in 10 votes, right? And that is a proportion of the total number. So there's, let's say, 100 million tokens. Nnamdi has 100. I've got 10. So he submits his 100 votes in. I submit my 10 votes in. And we are a fraction of that total community of voters. And then the smart contract tallies it up.
We don't lose our tokens. That's just our voting.
Yeah, holding tokens is the right to vote. like in equities, you have, when you own equities, you have the right to vote, or you hand it over to a proxy to vote for you. So the same kind of analogy is that I'm holding the tokens. I'm not using the tokens to vote, even though that may be a model down the road. But by having the tokens, I have the right to vote. And because I've got 10 tokens, I can put in my equivalent of fraction, a proportion of vote in. So same thing within the equities market. Let's say a company has a total of 100 million shares outstanding, and Nnamdi, you own a million, right? So then you go in and you basically have 1% of the vote, right? And it's the same thing here. Here, though, the voters, we don't need to know who they are. And the smart contracts take care of all the tallying and identifying when there's a quorum, when there's an agreement. Okay, well, when 60% of the vote goes this way, then that proposal now moves forward, right? And it's all automated, right? It's basically automated stuff, right? So it's like stock voting, but without all of the stock meetings and all that kind of stuff. And you could delegate a proxy to do the voting for you, and all that's available.
You
So
mentioned anybody can submit a proposal. What is the criteria? You have to be part of the community in terms of that particular platform. How would one go about submitting that
yeah,
proposal to be
I
voted
mean,
on?
every protocol has a different criteria, but in general, it could be anybody. In general, it could be anybody that comes in, and they might filter it to some degree, so nobody's putting out some weird stuff, or just deranged like spamming. But effectively, anybody can come up and say, "Here's a proposal that I'm looking to do," and this is what's happening. For example, in Aave, other companies are coming up and proposing how to integrate with Aave, right? It's like, hey, this is what we proposed, and then the community votes on it. And obviously they will have some tokens to sway votes on their side. And so there is politics involved now, right? There's politics in this thing, but the politics are very open. And I think this is what governments need to be more afraid of, right? So
Hmm.
not stable coins, yes, but this form of governance can and will expand to include other things. But DeFi has accelerated this form of the DAO, using DAOs. DeFi DAOs are not DeFi, but DeFi has accelerated the awareness and the usage of DAOs today. So DAOs are used heavily in the DeFi space. And had it not been for DeFi, DAOs would have been where they are 2 years ago, 3 years ago. They're like, yeah, I've heard of it. It's cool. It's a cool thing. We've got a DAO set up, but nobody really does anything with it. Now it's front and center.
For those
This is
that
not to
don't
say,
know,
yeah, this is not to say that I'm not saying here Aave has a DAO, but DAO is equated to governance, but they're not equal. They're not identical. Right? A governance and DAO are two different things. DAO does governance. You can have governance without a DAO. You can think of DAO as a legal entity. You can govern things without having. You can run a business without having a legal entity. But a legal entity gives you a lot more things, bells and whistles. So a DAO lets you do a lot more. One of its functions might be governance, but the centerpiece is governance, right? Is the governance and community is the centerpiece here. The ability to put together a community. So you can have some kid in Laos who is able to vote, right, and express his or her view on something, and say, well, and they use tokens to generate revenues for themselves. They put up a little bit of money in Uniswap or to collateral, to put their tokens as collateral and earn some money on that. And they're not earning much, but they're maybe earning $50 a month, and that's changing their lives. They should have a vote, and so they do have a proportional vote. So it's global by nature. Anybody can come in and come in as a voter, and their vote, their fraction of whatever shares they have in it, and anybody can come in and propose. So it's hyper democratic, right? It's really the realization of democracy in a more pure form. And I think, but we're in the beginning stages of it. It's not without some of its issues. But we're this is. I just can't wait to see how this all looks like 10 years from now. and it's just going to gobble up so many other things, right? There's no reason why I can't elect a politician through a system like this. There's no reason, right? Not to say that I suggest it, but in a more mature situation with more bells and whistles and tools in place, and digital, decentralized ID and all that kind of in place, and making sure that's in a country you don't want a non-citizen voting and all those are in place. I think this is where we're headed, right? This type of governance is going to grow. It's going to expand beyond the DeFi space, and we'll get into other things. I run this large blockchain community in New York City. We've been thinking about making it into a decentralized governance model where we can put in a proposal. Somebody comes in and say, hey, I want to talk about one of my products. Like, well, the community can vote. We don't want to hear from you, or we do want to hear from you. So, and if you do want to come in, buy our tokens. So there's an ecosystem. So you pay your way into the community to get to talk and to listen and all of that. So
let's take a step back. We covered quite a few things right there, and I want to make sure the audience is following along. So you mentioned DAO, right? And that stands for those that don't know, decentralized. We'll talk about that, and we have a slide right here. Wyoming is going to come up in a second. Wyoming is the first state to legally recognize DAOs, and this is basically totally what it means: autonomous organization. It's all being run by a program, essentially, right? So the question helped to clarify, because you mentioned now, we vote on the community votes, right? Who implements the change once the voting has occurred? How does that process work, to help the audience understand?
So there may be people that the community has decided are responsible for the implementation, right? So I can say, look, I want to be responsible for the implementation, and if I get the implementation done, at the end of it, I might be awarded tokens. Right. So the entire life cycle of everything moves on chain, basically onto the blockchain. And you have a full economic model using tokens. Right. So I might go in and say, I propose, hey, I want to build a dashboard for your blockchain. There's no dashboard. And I'm willing to do it for $100,000. And these are the things it will have. And the community votes on it, and says they give me 6 months to build it, and then I have 6 months to build on it, and then another vote goes in on whether I did it or not. Look, here it is, and another vote goes in and says whether did I complete it or not, and it's like 80% of people say no, you didn't. So I'm not going to get that money, right?
Wow, that's very interesting, that breakdown, because that's the follow-up question, right? Like, what if you don't do the work in accordance to specifications, like any IT project that ever existed, right? So that's amazing.
I mean, the flexibility of this is key, is for us to design our own processes, right? We can design using blockchain our own ways of doing things. Obviously, you don't want to award a contract and guarantee the person $100,000, and then they do a horrible job of it, and then you're beholden to paying that out. You want them on the hook and to say, well, the community is going to decide if you met your deliverable, and then the community is going to decide if they're going to pay you a monthly upkeep fee to keep that thing running, right? And so on and so forth. And so I think it's a very interesting way to do things, right? And it doesn't have to be one person. It could be the community can say, well, we're open. This is what we want to do. We're open for bids. We want 10 proposals, 5 proposals, whatever it is, and people come in and propose. Here's my proposal of building a dashboard for you, and the community reviews it and they vote. And the winner of the vote, whoever gets the most votes, is the winner of that tender, of that contract. Then they go off and build it, and then the community can come back and vote and say yay or nay, right? And go back. We'll give you another month, right? Here are the issues. So I think that's very powerful.
Extremely powerful. Question for you: what's to stop an entity or a person from basically monopolizing those votes with their tokens and saying, you know what, I want to just dominate this particular platform and I want to have, like, what's to stop that from happening?
The same thing that would stop somebody from owning all of a public company. It would cost a lot of money. And the same thing that, in terms of Satoshi Nakamoto's view on decentralization and Bitcoin, is if one miner controlled all the Bitcoins would be worth nothing. So at some point in time, I, as a controlling entity, know, as a token holder, know that I don't want to own too many of these tokens, because then the value of it might start to drop. People are like, well, this is getting centralized, and people walk away, right? People start to walk away. But theoretically speaking, if I could buy 100% of the tokens, I'm buying them from somebody that's willing to sell them to me, and then I become a centralized governance. If that's what I want to do, and I'm able to do it, and people are willing to sell it to me, that's fine too, right? There's nothing wrong with that. It's just that people will know now that this is a centralized system. There's a single centralized governing body, and maybe that's fine too, and that will continue to operate. The point is, the market dynamics will allow for it, right? If you've got the buying power and the people that are holding other tokens, let's say that somebody did a contract, they delivered that dashboard thing, they got $100,000 worth of tokens, and they're willing to sell it to me. Well, they decided that this should be that way, right? They're basically voting me in to be the only governor. And so the importance is that flexibility is there. It's also possible to say that no one single account can have more than X percentage. Obviously, you can create more accounts and kind of circumvent some of that. There may be ways to enforce diversity of opinion in the voting, and people are working on some of that, right? So, if you own a lot of tokens, Nnamdi, and I own tokens, I call you up and like, Jamiel, I don't want to vote. I'm just, I'm just there to make sure that I want the tokens to go up in value. I'm like, Nnamdi, do me a favor, can you vote this way? I'm politicking now, right? I'm going to politic, and that's going to occur. And I think these protocols are going to mature and kind of help in an open way, use quantitative ways to help minimize that kind of lobbying and all that kind of stuff from occur.
Because when you said that's exactly what I was thinking about. That literally sounds like a lobbyist right now. Like you're lobbying for the platform to vote a certain type of way. And interesting enough, is that even a particular business model? Do they have you seen cases of that in which you may not have a stake, but you work for a particular entity that has a stake in this platform, and you're lobbying on their behalf, similar to what's going on in DC?
I know I've been approached by, like, this is firsthand, and I can't get into the specifics, but I have some tokens, and I've been approached by people to vote a certain way, right? So that's what I mean by the politicking is there now, right? And it's mimicking the real world of politics, and it will more and more do so, right? And so, and I can tell you that if I'm proposing something at a protocol, and that proposal is really important to me, whether I really am, from a conviction point of view, I really believe in it, or from a financial point of view, I personally will tell you, I will go contact the other voters and say, hey, look, can we have a side conversation? I'll do it. And I would hire somebody else to do it. If I would effectively, it would be a lobby firm. I would effectively do it, and because why not? The difference here is, and I may pay them and stuff like that. The difference here, obviously, is that there are so many tokens, right? I can produce, 100 billion tokens. I can create ways where that token supply continues to increase, so my fraction of ownership decreases over time. So there's many ways to kind of come at that problem, but those things are possible, and I think we'll see more and more of that. That's my point, is that the DeFi world has helped accelerate the DAO and governance world and start to make it far more mature to the point where we're going to start to see politicking, and we'll continue to see it get more and more mature. So I find that very exciting.
What I know we're close to our time. We're over the 12:30, but I know we said 12:45. I have a question for you, so you can just kind of open the audience's mind up. Can you just think through some use cases that everyday people will start seeing, so they can kind of start relating DeFi to actual, what's going on in my life? What are some of the services that I use?
Yeah. So what's happening in DeFi? I mean, everybody has savings, and at minimum, people are putting money into the bank, and whether it's a CD or an interest earning savings account, treasury bills. Those are considered low risk, and that is happening in a very big way. That's one of the major use cases in DeFi, where you can take some of your tokens, and obviously you can convert your fiat into some of these tokens, and then park the tokens as collateral into some of these protocols, and you earn interest, right? And that, I think, is probably the most low-hanging fruit for the common person who doesn't care about blockchain, or just like, I don't understand it, or doesn't care about Bitcoin, I don't trust it. Ethereum, I never heard of it, but like, what is it going to do for me today? Then that lending and earning interest, that money market has emerged and it's become very, very mature, or is far more mature now than it was a couple of years ago, and it's a far more usable by the average person than it was even a year and a half ago, and that's going to continue to grow. So
Interesting that you said that. Can you also, like, let's that is, I think, is a very pertinent use case in everyday people, but and understand the interest difference, right? And what Jamiel was talking about. I think in your bank it's what, like point 0, some ridiculously low amount, but you're getting anywhere in that particular use case from 4 to 8% on your money. I mean, it's a huge difference, right? You're going from like literally 0.001, in which you're not even seeing a shift in your these are high interest savings accounts, to massive interest rates that you're getting in these types of models. And I think that's an excellent use case for the everyday person. Thank you for mentioning it. Do you have one more?
well, I just want to add to that, to
Yeah.
the risks, though. The risks are different. So
Okay.
do your research, DYOR, speak to your financial advisor and all that, right? So don't just jump into it and park into some protocol that's not really known, and then you could lose that money as well. So the risk profiles are different. Like they're not insured. Like in the U.S. we have FDIC insurance and stuff like that. Very different. There's a lot of differences. So that higher interest rate is a risk premium that you're going to collect. And if you're with the more prominent protocols, Compound, Aave, you've got some kind of comfort level, but these are all come with certain risks. So you're not going to put your life savings into this stuff. You know, maybe talk to an advisor and stuff like that. I think so. I think so that's changing everything. And then I think NFTs are the art world is the beginning of this. So the NFT world is going to change everything, right? It effectively, we've the crypto world got it backwards. We went into the fungible world and then into the NFT world. But reality is the NFT is the default case, and the a fungible token is the exception, in my opinion, right? So in reality, in life, everything is an NFT, right? Me as an individual, you as an individual, our DNA sequence is unique to us. We are NFTs, right? So we are, these non-fungible tokens. Even a DAO, people say a DAO, currency is fungible, but fungibility depends on where you demarcate the fungibility. A US dollar and a Canadian dollar are not fungible with each other. They're demarcated at different levels. So fungibility and non-fungibility is a gray. It's a, I would say, a spectrum, and what it is you're classifying for a thing what information of that thing is can be lost, and what information in that thing cannot be lost, right? And I've been working with NFTs for a couple of years. I first started building NFT. This is a project with the World Bank. We're building a supply chain thing for Haiti, and I built the platform. And that platform, I designed the platform, and we use NFTs to track shipping containers, right? And so, but the problem with that is that shipping containers, before they're loaded, they're let's say we're talking about mangoes, they're these large barrels, or not barrels, whatever they call them, these, like, baskets, whatever, right? And then before their baskets contain, like, was it 500 mangoes, and there's like 20 of them in a container, whatever, 100 of them, whatever. And then before their baskets, they were in buckets, right? So the NFT for the bucket tracks the bucket until it morphs into a basket, until it morphs into a container, right? And so the idea of NFTs at this point, in my design that I built there, these were fungible, non-fungible tokens, if that makes sense. I could combine them and create new tokens. So the idea of fungibility and non-fungibility, and you'll see in literature semi-fungibility. And the example of semi-fungibility is, for example, of a ticket. Let's say, Nnamdi, you and I, we go to a Metallica concert, right? I love Metallica. And let's say this is their last concert. I got that ticket. You got that ticket. Let's say we bought it for $100 and we wanted to sell it on eBay or whatever, these ticket platforms. We could probably sell it for $100, $150, whatever, right? Not much more. And we go in and the concert was great. And, and then we hang on to that ticket, right? We hang on to that ticket. 20 years from now, that ticket is something else, right? It means something else to the market, and it has a different value. It might have a different value because it was the last concert. It has a different, and there's provenance around me being there and saying I am the ticket holder, right? And now that is a semi-fungible token. It was fungible because I could give you my token on my ticket, you could give me your ticket, and it didn't matter, assuming we sat in the same section, right? But now that ticket might become a non-fungible, right? Because that thing of itself, that unique serial number on it and whatever, mattered, right? And so you have this idea of things that are fungible at certain times of its life, and then they're not fungible at other times in its life, and so on and so forth. And so I'm doing a talk tomorrow on NFT 101 on the philosophy of NFTs to cover this very important thing about what is the range of, what does it mean for something to be fungible and non-fungible from a coder point of view. I'm coding and building these things, and we're in the front lines. What does it mean for somebody to own or possess, right? I own a copy of, I own a screenshot of an image of the Mona Lisa. You don't own it, right? But you don't own the Mona Lisa. I might possess a graphic image of a cyberpunk. I just downloaded it. I saw it on a screen on a web, and I downloaded it, but I don't own it. Somebody else owns it. Why? Because the creator of that said so, right? And the blockchain proves that. The creator said, this person is the owner of this graphic, right? You might possess it, but that doesn't mean you own it. And so ownership, so NFT is really about community and story and the person, right? And it's not about the technology, right? The technology is secondary, not even, it's nothing. It's just allowing this for this to come together. And anywhere where you have community, story, and the person, right? NFTs are going to be a great use case, and we'll see that emerge in business, because the default in business is non-fungibility. You sign a lease contract for a rental. That lease contract is not fungible. You can't exchange it with somebody else. You sign any agreement, a car loan, a house loan, a mortgage loan, anything in life that you sign that's business related, that's a non-fungible token. And so the fungibility aspect is just happened to be because we got so caught up in the world of currencies as opposed to assets. And that pendulum is swinging now. And the art world is kicking down that door for us. but you'll see swing into the NFT world will swing into the world of finance and everything else.
Listen, all fascinating stuff. Into the audience, Jamiel is hosting an all-day conference tomorrow covering DeFi, starting 1 p.m. EST, and then jumping into NFTs or EDT, and jumping into NFTs 6 p.m.
Yeah, in the morning. In the morning, we're doing a blockchain 101.
So you know what, and what I'm going to do for the audience, I mean, and all guys, this is great information. He has Blockchain NYC, and it's just so much free live courses and bringing experts in. And tomorrow's no different. I'm going to post a link right here for the conference tomorrow. They can register on the Blockchain 101 website. Is that accurate?
Yeah. Just go to blockchain101.com and everything's there. So
Right,
it's not a conference. It's a course. It's a full course. Yeah, it's a three-part. It's a three-part course.
Let me just say 3-part. I'm adding it right now to the comment section. You're not going to see it on LinkedIn. I have to come in I'm going to say 3-part blockchain course Saturday. That's the 16th, right? October.
Yeah.
16th. So I'm going to definitely be in attendance to the afternoon session for sure. Have a hold up. Let me add it right now. Give me a second. All right, here we go. All right, I just put it in the chat. So those on okay, you know what I'll do also? I'll show it here. So if you're on LinkedIn, you can see it. You can go to Blockchain 101 to learn more. Look, we just scratched the surface in this interview, and there's just so much more. And if you're interested in learning about it, tomorrow is the day. Let me something happened. Yeah. Give me a second. I'm having some technical, something just went crazy. All right. So anyway, yeah, this is really good information. Jamiel, how can the audience find you if they wanted to get in touch with you?
I'm on LinkedIn. That's probably the best way. So it's linkedin.com/IN, which is what they require in the URL, /Jamiel, JAMIEL. So that's my LinkedIn URL. Or you can go to jamiel.io website, and I got my contact information there.
All right, excellent. Listen, I mean, matter of fact, I'll just leave this on while we're ending it. Listen, thank you very much for today. I mean, your perspective on DeFi. I mean, obviously you can Google this stuff and you have all sorts of definitions. I like your perspective on NFTs. I've never heard it described that way, and also on DeFi. Very good conversation. I really enjoyed it, and I really thank you for your time today. And I look forward to bring you back on. Give a shout out to your upcoming book, please. Talk about your upcoming book.
Yeah, so I have a book called the Decentralized Phenomenon, which is for the casual person to read and understand DeFi in great detail. So if you're looking to be an expert in DeFi and understand it from the very basics to more advanced in an incremental way, that will be with Columbia University Press, hopefully coming out first quarter next year. I'm working on a NFT platform. It allows you to mint your Instagram photos and more. It's called Instamint, and we just bought instamint.com, and we'll be putting up a site there, and I already have developers building this, and we'll have that up hopefully by the beginning of November. And I think our goal with Instamint is to make it easy. You don't need a crypto wallet. There's no gas fees. We're making it easy for the everyday person to say, hey, I've got some great photo that I took 3 years ago. It's on Instagram of something really cool, and I'm going to sell it and make a little money. So we're doing that.
Pretty awesome.
Yeah.
Listen, good stuff. Once again, thank you very much to the audience. Have a happy Friday as always, and a good weekend. As always, we're back every week, Friday, 12 p.m. Eastern. You'll catch us live. Next week is no different. Thank you all for your time today. Let me put this thing off. Thank you all for your time today. Have a great weekend. Jamiel, once again, thank you. I'm going to see you. Well, I'm going to be part of one of the many people behind the scenes watching during tomorrow's course in the afternoon session. And I definitely appreciate that. Guys, you have a great day to the audience.
Thank you.
And Jamiel,
Yeah,
take care.
thank you. Yeah, thank you. Yeah, thank you for having me. I appreciate it.
I appreciate you. Take care.